Before we proceed to the adjustments, let us consider the preliminary trial balance first. So this is the preliminary trial balance with different balances. So this is the first adjustment. Provision for the uncollectible account is 5% of the outstanding receivable account. As you can see in the preliminary trial balance, 60,000 is the total accounts receivable, and out of this amount, 5% is assumed to be uncollectible. To get the exact uncollectible account, we just simply multiply the allowance for uncollectible account to the total accounts receivables. So computation for this is 60,000 times 5% is equal to 3,000. So from this computation, we can proceed to journalizing. So debit is uncollectible account of 3,000, while credit is estimated uncollectible account, which is also 3,000. Let us now proceed to the second adjustment. Unpaid salaries and wages, 8,000. So our interpretation for this is that it is an example of accrued expenses, meaning this is already an expense but not yet paid. So our entry for this one is debit salaries in wages, which is 8,000, and credit accrued salaries in wages, which is also 8,000. So for the third adjustment, building is depreciated at 10% while furniture and fixtures is at 20% annually. So in order to get the monthly depreciation, we will have to follow this formula. And remember, we will only get the monthly depreciation since only 1 month have passed since the preliminary trial balance. For building, we will multiply the cost of the building to the annual depreciation and divide it to 12 months. So the cost of the building from the preliminary trial balance is 1,950,000. Multiplied by its annual depreciation, which is 10%, that would equal to 195,000. Now divide it to 12 months and the result is 16,250. So each month, building is depreciated at the amount of 16,250. We will apply the same process for the furniture and fixture. So the amount of furniture and fixture in the preliminary trial balance is 1,575,000 times 12% annual depreciation and divide it by 12 months. We will get the amount of 26,250. Now the entry for this adjustment is debit depreciation expense and credit to accumulated depreciation. Depreciation expense is 42,500 while accumulated depreciation building is 16,250 and accumulated depreciation furniture and fixture is 26,250. That is for the third adjustment.
The fourth adjustment is interest on bank loan applicable for this period is 5,000. The interpretation for this one is out of 20,000 prepaid interest on bank loan. 5,000 is already used for an expense. So in order to adjust this one, we will only have to deduct 5,000 to the prepaid interest. So the entry for this one is debit. Interest expense 5,000 and prepaid interest on credit, which is also 5,000. Now, let us move to the fifth adjustment. Supplies actually on hand is only 5,500. So the available supplies left for operation is only 5,500. So in the preliminary trial balance, total operating supplies is 58,000. So since 5,500 is the supplies left, the other supplies is already recognized as expense. In order to get the supplies used, we deduct 5,500 to 58,000. So 58,000 minus 5,500 is equal to 52,500. So 52,500 is the supplies used. The entry for this is debit operating supplies expense of 52,500 since it is already an expense, and credit operating supplies 52,500. The sixth adjustment is about the 800 of the insurance premium has expired, so the prepaid insurance is now less 800. In order to recognize this expense, we will credit 800 pesos to the prepaid insurance. Our entry will be debit, insurance expense, and credit prepaid insurance. The final adjustment is about this one. Cash payment by a customer covered by invoice number 0085 dated November 31, 2018 in the amount of 3,800 pesos was not recorded. The adjusting entry for this problem is so simple. We will only have to recognize cash received and income earned. So the entry is cash on hand 3,800 debit and hotel income 3,800 credit.
So let's proceed in the adjustments. Adjustments entries made at the end of an accounting period to ensure accurate financial statements by accounting for transactions that may not have been recorded or updated during the normal course of business. So we have a letter A here. Provision for uncollectible accounts should be at 5% of the outstanding receivable account. So we had an estimated uncollectible account in credit, which is 3,000. So when we plotted it here, and adjustments, becomes an uncollectible accounts, and we have it here in debit, which is 3,000 pesos. Let's proceed with the letter B. Unpaid salaries and wages, 8,000. So we had a salaries and wages, number 26. We had it on a debit, 8,000. And as if lang na here, when we plotted it, accurate salaries and wages, which is 8,000, same as here at the debit. So now let's proceed with the letter C. Building is depreciated at 10% while furniture and fixtures at 20% annually. So how did I get this 16,250 in building? So we had it on a trial balance, which is 1,575,000. We have 1,950,000 times 10% is equals to 195,000. We divide it into 12 because 1 year is equivalent to 12 months. So 195,000 divided by 12 is equals to 16,250. Same goes with the furniture and fixtures. We had a 1,575,000 times 20% is equals to 315,000. Divided it into 12 equals to 26,250. When we plotted it, we should just add these two, and it is equals to 42,500. Now let's have a letter D. Interest on bank loan applicable for this period, 5,000. Now the interest in bank loan, which is 5,000. Prepaid interest in bank loan, we have it here in credit. Now when we plotted it, we have it here in debit. So it is now a prepaid interest expense bank loan since it is updated. We have a letter E. Supplies actually on hand, 5,500. Now we have it on a trial balance, which is 58,000. So 58,000 minus 5,500 is equals to 52,500 in a credit. Now when we plotted it here in adjustments, we had 52,200 in operating supplies expense. Now we have a letter F, 800 pesos of the insurance premium paid in advance has expired. Now, letter F here is a prepaid insurance. We have it on a credit, which is 800. Now, when we plotted it here, since it is expired, we had it as an insurance expense in a debit, which is 800 pesos. Let's have a letter G. Cash payment by a customer covered by an invoice number 0085, date January 31, 20B, in the amount of 3,800 was not recorded. So, since it was not recorded, we had it on a cash in bank, which is in a debit, 3,800. Now, since it became a hotel income, we had it on a credit, which is 3,800. That's all. Thank you.
So, good day everyone. I am Hanilin Simiel and I am the one to explain our adjusted trial balance. So, to have the adjusted trial balance, all we need to do is to compute each account's adjusted balance by combining the unadjusted trial balance and the adjustment figures, and then enter the adjusted amounts in the adjusted trial balance columns. So, we will combine the unadjusted trial balance with the adjustments. Reflecting these adjustments will yield the adjusted trial balance. So, let's start. The first one is the cash in bank. So, since they are both debit, all we need to do is to add them together and plot them on the debit side of the adjusted trial balance. So, 180,000 plus 3,800 is 183,800. Next is the petty cash fund. So in this case, it will remain as is since there are no adjustments that have been made. And it is on the debit side since the unadjusted trial balance is on the debit side. Next is the accounts receivable. So it will also still remain as is since there are no adjustments that has been made. Next is the estimated uncollectible account. So in this case, since both entries are credit, so we add them together and plot the total on the credit side of the adjusted trial balance. So 1,000 plus 3,000 is 4,000. Next is the prepaid insurance. So, in this case, given that the unadjusted trial balance is on the debit side and adjustments is on the credit side, we will subtract the total adjustments from the unadjusted trial balance and plot the result on the debit side, considering it has the greater amount. So, on the debit side, and we will have to subtract this 2. So 12,800 minus 800 is 12,000. So next one is the prepaid interest, bank loan. So in this case, we will also have to subtract this one. So 20,000 minus 5,000 is 15,000. So we will have to plot this on the debit side since it has the greater amount. So the same on the prepaid insurance and prepaid interest, all we have to do is to subtract these two since it is debit and credit. So 58,000 minus 52,500 is 5,500. Next is the building. So since there are no adjustments that have been made, all we need to do is to copy this also on the debit side. Next is the accumulated depreciation building. So in this case, since there are both credit, so we have to add them together and plot the total amount on the credit side. So 116,250. Next is the furniture and fixtures. So it will also remain as is. Next is the accumulated depreciation, furniture and fixtures. So this one is, we have to add them together since they are both on the credit side. So 143,250. So the next one is the linens and towels. So in this case, it will remain as is since there are no adjustments that have been made. So we'll plot this on the debit side as well, 600,000. Next is the notes payable. So it will also remain as is, only that it will be plotted on the credit side. Next one is the DL Marks capital. So it will also remain as is and it will be plotted on the credit side as well. Next one is the DL Marks drawing. So it will be plotted on the debit side of the adjusted trial balance and it will remain as is since there are no adjustments that have been made. Next is the hotel income. In this case, since they are both on the credit side, so we will add them together and then we will plot this on the credit side. So 144,400 plus 3,800 is 148,200. So the next one, it will remain as is. The taxes and licenses, telephone and postage, laundry expense, and the audit and legal fees will remain as is and it will be plotted on the debit side of the adjusted trial balance since there are no adjustments that have been made. For the taxes and licenses, we will plot this on the debit side, 12,808. So all we need to do is to copy this one. Also, the telephone and postage, 12,120. So the next one is the laundry expense, 15,000. Next would be the audit and legal fees, worth of 12,600. So for the salaries and wages, since there are adjustments that have been made, we have to add them together and plot this on the debit side. So 33,000. For the utilities expense, it will remain as is on the debit side of the adjusted trial balance. So we will just have to copy this one, 13,500. And this one, for the uncollectible accounts, it will remain as is on the debit side of the adjusted trial balance. We will just have to copy this one on the debit side. For the accrued salaries and wages, it will also remain as is, but it will be plotted on the credit side. So 8,000. Next one, for the depreciation expense, it will be plotted on the debit side of the adjusted trial balance. So 42,500. The next one would be the prepaid interest expense bank loan. So it will be also plotted on the debit side. Next would be the operating supplies, also on the debit side. And the last one is the insurance expense, which is worth of 800. So if you will add all the amount on the debit side of the adjusted trial balance, we will have a total amount of 4,623,700. As well as on the credit side of the adjusted trial balance, we would also come up to the amount worth of 4,623,700 as well. So this indicates that they are in balance. So that's all for the adjusted trial balance, everyone. That's all. Thank you.
My name is Genevieve S. Michael and I will be presenting the income statement. So all income and expense is located in this column. The income statement is based on the adjusted trial balance. Like for example, we have here the hotel income. The adjusted trial balance for the hotel income is 148,200. So we have
to put that on the income statement. Both are in credit side. And then now let's talk about the expense. We have here the taxes and licenses, telephone and postage, laundry expense, audit and legal fees, salaries, wages, utilities expense, uncollectible accounts, depreciation expense, prepaid insurance expense, operating supplies expense, and insurance expense. So we have to put this amount from the adjusted trial balance to the income statement. Also remember that all expenses are debit. So we have to put those expenses from the adjusted trial balance to the income statement on the debit side as well. After that, we need to get the total amount of both the debit and the credit side of the income statement. So the total amount of debit is 202,900 and the total amount of credit is 148,200. So as you can see, the total debit exceeds the total credit, more expenses compared to income earned. So that means there is a loss. So to get the amount of loss, we have to get the difference between 202,900 and 148,200, which is 54,700. And then we will get the sum of 148,200 and 54,700 for it to balance. So that both of the totals are 202,900. That would be all for the income statement.
Moving on from the previous presentation, hello everyone, I'm Cassandra Nicole S. Piedraverde, and I'm going to present to you the balance sheet. Now, a balance sheet is a financial statement that contains a company's assets, liabilities, and owner's equity. All asset accounts are allotted on the debit side, while all liability accounts are allotted on the credit side. As you can see on the screen, the accounts cash in bank, petty cash fund, accounts receivable, prepaid insurance, prepaid interest, operating supplies, building, furniture and fixtures, linens and towels, and drawing are allotted on the left side because their normal balance is debit. On the other hand, the accounts uncollectible account, accumulated depreciation of building, accumulated depreciation of furniture and fixtures, notes payable, capital, and accrued salaries and wages are allotted on the right side because their normal balance is credit. Now, to get the total of each side, all you have to do is add all the figures on their respective sides, and as you can see here, the debit side's total is 4,420,800, while the credit's total is 4,475,500. You can clearly see the difference of the totals since the credit side is much more than the debit side. And since this is a balance sheet, we need both sides to be balanced. Now, if you subtract the credit sides from the debit side, you will get 54,700. The next step to that is to add the total of 4,420,800 and 54,700, which will get you 4,475,500. And as you can see now, both sides are equal onto account, which means it is balanced. And the long process of this worksheet is over.